Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, April 16th. Next, rather quiet trade overnight as we get a little bit closer to the pause. Now prices are tilting to the higher side. Corn right now is steady to almost three better. Beans, same, but steady to three better. Very little change in the products. Meal is now tilting up maybe 10 to 15 points, while wheat prices, they've extended their gains, currently 4 to 6 cents better. Yesterday's bear spreading in both corn and soybeans has flipped a little bit this morning as the old crop is gaining on new crop. U.S. dollar is a fair amount lower. However, the index has so far this week remained within its range from last Friday when the dollar did fall to a fresh three-year low. In the U.S. here, rains across the eastern plains and much of the nation's midsection will be relatively healthy over the upcoming Easter holiday weekend. The above normal precipitation, it's expected to hold into the end of April. While this will bring some needed moisture to some of these drought-impacted areas of the southern plains, it will also keep U.S. corn plantings in check. Heavy rains will also renew flooding concerns along the lower Ohio River Valley. We'll also have to keep an eye on the overall coverage in the far western plains where conditions have been the driest and the rainfall totals here are expected to be the lowest. Also, not a whole lot of rain forecast for the northwestern Corn Belt nor the northern plains, as this area could use some relief from the expanded drought readings there. In South America, good rains across Mato Grosso and other top producing states in the west central and south central region of the country will keep yield potential high for their second corn crop. An overall drier forecast for Argentina will help their crops dry down and help harvest activities to accelerate. Later this morning, we'll get our weekly ethanol production data from the EIA. Production is expected to fall back to about 295 million gallons. That's down from 300 million gallons the previous week. Yesterday's NOPA crush report did show NOPA members processed 194.6 million bushels of beans in March. While that was up 9%, or nearly 9% from February, it was down almost 1% from March a year ago and also below expectations. The average processing rate fell to 6.276 million bushels a day. That was down from February and now the lowest in 6 months. The NOPA data would suggest total census crush for the month at 206 million bushels, bringing year-to-date crush in the first 7 months of the 24-25 marketing year to 1.438 billion bushels. While that's up 4.7% from a year ago, the revised USDA forecast is for a 5.8% increase. So while the lower than expected production also generated lower than expected oil stocks falling to just below 1.5 billion pounds, well below the expectations for a build to just over 1.6 billion. July corn has now had 2 consecutive lower closes, that after 7 consecutive higher closes. I look for prices to rebound here as U.S. demand should remain strong into the early summer months. New crop will likely be held in check with the higher acreage forecast here, while also expectations for higher production in Brazil. Obviously, here in the U.S., these acres will need to get planted, however, with delays likely to extend into early parts of May. July beans, they did bounce off their 100-day moving average here overnight. Yesterday, COFCO did reveal that they were expanding their grain trading operations in Brazil as the U.S.-China trade war escalates. Wheat, really just waiting on rains here in the U.S. Southern Plains. Yesterday, the Buenos Aires Grain Exchange did forecast their Argentine production for 25-26 at over 20.5 million metric tons. That would be the second highest on record and possibly could expand if the export tax there is extended. Thanks for listening, everyone. Hope you have a great day.